for anything, right? He
Right.
probably
Yes.
would have wanted to, but he couldn't. And I
Right.
paid for my own college on top of that. So there was always that expense in there. So yeah,
Yeah.
when you come to real estate, if done the right way, it's always going to be a home run. Obviously, you can't pay, 10 times what something's worth, but logically, if you could figure out what the rents are.
The Abundant Wallet.
Cool. All right. Well, Sal, I'd like to thank you so much for giving your evening and your time to the Abundant Wallet podcast. Thanks for coming.
Oh, it's my pleasure. Thank you for inviting me. I really appreciate it. I'm looking forward to this. I really
Yeah.
am.
Yeah. Likewise. Yeah. Absolutely. Cool. Well, you have a vast knowledge in a lot of entrepreneurial things, especially real estate investing. I would love to kind of dig into how you actually got started in real estate investing and any of the other business functions that you operate from day to day.
Sure. So, Larry, how I got into it. So my background is pharmacy, and I got into the pharmacy business at a young age. It was my dream to own a pharmacy. So I graduated, I was 25. At 27, I bought my first pharmacy. And I worked and I worked and I worked. And I was making money. And it was funny because, back then we were in New York, and we had a lotto machine. And lotto was kicking back like 6%. And I had all this money accumulated. So I told my business partner, well, let's start buying real estate. And that's how I got into the real estate business. And we started buying some multifamily homes in the Bronx. It was the area I knew because it was the area I grew up in. So I thought it was an easy thing. And, we accumulated a bunch of them. We had 3 together, and I owned 1 on my own. So I had 4 in total at peak. But, with that, it was a lot of lessons because I went in not knowing anything, right? I really didn't know anything. And now you're dealing with tenants and their problems. And wow, did I get educated fast, right? Going to Bronx County Court, was not a pleasure. And you deal, but that's how you learn. You learn how to do that. So my goal was always to keep these and hold them until the day I want to retire. And guess what? I still have 3 of them, and it's probably a 30-year story. Fast forward, this was 30 years ago, and I still own them. And I've only sold 1. So my long-term goal was good. My short-term goal at the time, well, I was dealing with the repairs and all that because I was kind of hands-on. So I kind of learned, and then I learned how to farm things out and how to hire the right people, and I became hands-off. And to this day, I have a person for everything, and I just call. And my tenants have been with me for years because I've learned how to build respect with tenants, treat them like people. I come from a different school. I didn't want to keep on raising rents and have a lot of turnover because I wasn't doing it full time.
Yeah, smart.
So if I had to do things differently and I had to learn, I'd probably go a little higher end and then try to upsell in the properties. Meaning I should have put like a little laundromat in there, or storage, or pay for parking. So these are the things you learn. But at this point of the game, the properties have valued probably triple, quadruple in their value. So now my next thing would be my exit. And you and I first talked about 1031 exchanges, and this is the area now that I'm interested in, is how to do a 1031 exchange. So I really don't get clobbered in taxes and keep some of the money. So that's the interesting part of how I got started in real estate and where I am now, and a lot of lessons that I learned from it. So there's a lot of good. There's a lot of good, and there's some bad. Floods in the houses and all that stuff is always the bad, and the bad tenants that come with it is always the bad. But you live and you learn. And now, I've learned at a young age, when I was a little younger, probably like 1 or 2 after I got burnt 1 or 2 times, to do the background checks, and that's so important. To really do housing checks and all the background checks. You could always get a bad egg, but you kind of weed a lot of people out by their credit rating. So
yeah, that's such a great origin story of yours.
Thank you.
I felt like you have dipped in a lot of different,
Yes.
buckets. And it seems like real estate and pharmacy is something you started with, and it's kind of morphed or transitioned into bigger and better things. Yeah.
Absolutely. So, pharmacy has always been my bread and butter. I love it. I respect the profession. It was something I wanted to do at 13. Then there was always a building block. And of course, I come from a generation where there was no internet, right? We had to read books and write magazines, and I remember money magazines, so I really learned a lot from there. Self-taught. I never took a business class in my life in pharmacy school, right?
Yeah.
So what I did learn is how to invest, and I've had three great teachers in my life, three mentors. Two are no longer here. And I got a lot from them. One simply said, make more money than you spend.
Yes.
Never said how much money. Never said to make $1 million. He never said to make 100. He just said, make more than what you can spend. And never forget that. I think I was probably 15 years old when he told me that. My next great mentor, he always said to me, in business, $1 is better than no buck. And I tell you, I use that line at least weekly in my other business calls, at least weekly. And I say it was one of my greatest mentors. He taught me a lot in business. And my third mentor, who was my dearest friend and my business partner, he said, you don't need a fancy computer to analyze a business. He goes, it's common sense. He goes, a little piece of paper and a pencil. He goes, we'll figure it out. He goes, keep it simple. And these three great mentors really got me to where I am. And I thank him all the time. Again, two of them are no longer here. So with that being said, the other thing, so I've learned how to invest. So I self-taught, learned the stock market. And I teach my kids the same thing. Understand money. Once you understand money, it'll help you for the rest of your life. So that's like investing in annuities, insurance policies, getting the best bang for your buck on anything that you shop for, knowing what stocks, like how to analyze and what to look for. I still do it to this day. I'm still an active trader. I've simplified it so much. I don't chase the shiny coins anymore, right? I was in the .com days, right? Now it's the AI days, right? It was the goal, but I've learned and I've become so disciplined now that, again, I teach my kids the same thing. But that's a building block when you say, like, what wealth building strategies. This is stuff that you do like when you're in your 20s and 30s. And then I'm 58, so when you get to my age, and I'm hoping I still have another good 10 years left, these are things that you have with you that, like, wow, I can't believe I was so disciplined all these years, but it's a learning process, and you just keep on teaching yourself. So the learning the stocks, the ETFs, even in the beginning was like the mutual funds, dollar cost averaging. Like I tell my oldest is 21. He's due to graduate from business school, and he just got his first internship at PwC. And I said,
fantastic.
The first thing you do is put the money in a 401k, max it out. I said that, and then I said, you'll thank me in 30 years. You'll thank me and say, wow, I can't believe. I said, just got to max it out. And even my youngest, who's hustling, he wants to go to business school also, I keep on telling him, save your money. Just save your money and start investing. And then we invest, like we buy stocks and stuff. I teach him how to do it. So, again, it's a building block. And I don't own anything of the company, but there's a program that I use. It's called VectorVest. I've been using it for years, and it has simplified and it has changed my investment game. And it's just a learning software, and I think they charge 99 cents to get started. It's the best thing I've ever invested in.
Yeah,
so
you can't beat that.
You can't beat that. So, and then as I got older, I started getting into more of alternative assets. And what of alternative assets, right? You could go and buy gold. You could buy futures. You could buy all it. But I found collecting watches, investment grade watches, have really brought a good ROI. And when I see investment grade, Rolex, and when people think of a Rolex, oh my gosh, I can't go and spend this kind of money. It's this is a want. I'm like, yeah, you could enjoy it, but when you buy it at the right price,
Yeah.
that is like money in the bank, and it's buying a blue chip stock, and chances are it's going to increase in value over the years. So I collected a bunch of watches, and then a couple of years ago I said, okay, what am I going to do with all these watches? So I learned the business. I took a 2-year course on how to do the business, and now it's a business mind. It's like, because again, I'm an entrepreneur by heart.
Yeah.
And so you put that real estate and now my watch trading business. And, I have a store on, a site called Chrono 24.
Okay.
I sell on a lot of auctions, but it's knowing how to buy it, how to sell it. And it's a game that people play, and people invest money in watches. It's not a luxury as we think of it, which it is. But if you buy smart and buy the right pieces, it's an investment, and that's how I look at it. I look at it as an investment, almost where real estate is. So that's an interesting thing. And with that, I want to talk to you about my business coaching business.
Yeah. I wanted to just unpack a little bit of that, because that was a lot.
Yes,
so,
please.
Like the fact that you had 3 mentors and you started at a pretty young age, like there's a lot of us, including me, who are late starters and don't have that. And, maybe it was there and we overlooked it, but you started at a young age. So you had the foundation early on. I think that's just fantastic. And
yes, absolutely. I thank myself every day that this is what I had.
Yeah. I really like the middle one where you said the $1 is better than no buck, and I can transition that to real estate, because there's a lot of people that are just getting into real estate, and they are, for lack of a better term, just greedy. They want a lot of return, or they want this and that. And I always say that 1% of something is better than 100% of nothing. So
that's right.
I feel like that's kind of like this in the same vein, and I love that. It's great.
When you think about it in real estate, because I have a small real estate company, right? So if you do it the right way and you go into like you buy it under an LLC, now you have write-offs, right? You could write off your car, your gas. Anything that has to do with the real estate is a write-off. It's a legal write-off. So you might not make a killing. Like, look, I bought properties 30 years ago, and I said every property I bought, I overpaid for it, right? But who knew that in 30 years that where I am in the Bronx is going to be like the hottest area ever, right? Yeah. It's the hottest area, and who knew that? You just don't know. You don't know what you don't know, right?
Exactly.
But with real estate, especially if you buy multifamily or mixed, where you have some commercials, if you do it right, you're gonna minimally make 5 to 6% a year on your money. You're gonna have a normal increase, and hopefully your rents cover your taxes and your expenses. And if you're in commercial, well, you triple net lease, and your tenants cover everything, right? Yeah, you're gonna pay a premium for it, but it is location, because I am no expert in anything, but all I remember is when I bought my properties, they were all near schools, churches, shopping, the buses, and the train.
Okay.
And with that being said, I said, most tenants, they're not going to be driving, right? They're going to be living, and they're going to be commuting to work. So you want to be, and that's why I kept in the area of where I grew up, because I knew the area. Yeah. And like, I didn't want to go an hour away or 2 hours away, and just because my parents commuted, right? So, and I come from both my parents were immigrants.
Okay.
They both were low-wage earners. My mother was a dressmaker. My father ended up, at the end of his working career, was a doorman in Manhattan. So neither one of them had any business experience. And I was self-taught. So I didn't come from, Dad just wrote me a check for this. No, Dad didn't write me a check for anything. Right? He probably would have wanted to, but he couldn't. And I paid for my own college on top of that. So there was always that expense in there. So yeah, when you come to real estate, if done the right way, it's always going to be a home run. Obviously, you can't pay 10 times what something's worth, but logically, if you could figure out what the rents are and how much per square foot are in that area, you could figure it out, and then you could make some money, and the return is amazing. The return is amazing.
And even when you mentioned the return of like 5 or 6%, like,
you're not going to get that in a bank.
No, and in the big scheme of things, everyone is worried about return, but like I feel like even in this economy, like I will take that any day. Like,
Oh my God,
you know,
that's. I mean, that's and real estate is real. Like we always say, you hit it. There's something there. You're hitting a brick wall or anything.
yeah,
You could buy a stock today, and tomorrow it's down 50 points. Right? You don't know. There's no guarantee. Real estate, it's there. It's gonna, and you're gonna just, yeah, you're gonna run through problems. Realistically, you might have it vacant for a while, but
yeah,
you do your best and you advertise it, and you keep it up to where it has to be. I think it's a great investment. It's a solid, but it's a building block. It has to
yeah,
be a building block. And most people have created wealth through real estate,
yeah,
right?
yeah,
So,
definitely, yeah. I mean, what was Carnegie's saying? Like 90% of millionaires come from real estate.
absolutely,
I mean,
absolutely.
that is a huge percentage. That's too
Huge.
much to not do it, right? So,
Exactly, exactly.
yeah.
That's exactly it.
Yeah, but you mentioned something else with your watches. Like I felt like because your mindset isn't just one dimensional. You took a hobby and you made it a business, or you saw you were a visionary and you saw what something like this, just not to downplay it, but just something as easy as being a collector of luxury watches, and you turned it into a business basically.
Yes.
I mean that not everyone looks at it like that.
Yeah.
I know a lot of people are straight collectors and they do it as a hobby.
Correct.
What did you see it in that? Because I mean, you're talking about watches, kind of like you're talking about real estate. Like
Yes.
it's a business. So
It's a passion.
yeah. Like, so what did you see in that maybe other people's don't?
Interesting. So, I like talking to people, and like yourself, that when they have watches and they didn't know what to do with them, they were buying the next, oh, let me get this because I saw so and so on TV wear it. And
Yeah.
and I like to look at it as I'm helping people. And when now I talk to people who call me and they say, hey, I want to get this one. I'm like, why? Let's talk about your options. Let's talk about what might be in your price range. Let's talk about what you may be able, if you were on a desert island and you had no money except a watch, that you can hand it to somebody and you'll get money from it. I said, that's how you have to think of this. This
Love
is
that.
you have to think about it as an investment. You want to wear. Look, watches are made to wear. When you're done with it and you want to sell it, you have it polished for $50 or $100, and then it becomes brand new. So you wear it, but you can't just go and say, oh, I just want to get this with the diamonds on it because you got to get something that you like, but you also want to get something that it's going to build some kind of wealth, some kind of return. Again, go back to real estate, right? You don't want to just buy a shack somewhere because it's the cheapest thing on the block. I mean, unless you're a builder and you could, renovate it. You want to get something that that's going to become valuable. Where, wow, I think I could get $3,000-$4,000 a month. This is a 2-bedroom or a 3-bedroom or 4, whatever it is. Or I could put something. I could sell the park and I could sell the.
Yeah.
Same thing with watches. Look at it as, the mindset of this is an investment. I'm not wasting the money. It's not like I'm going to gamble it and I'm going to waste it, right? I'm investing in a timepiece that is sought out. And I'm going to buy a nice brand that people want, like Rolex, like Omega, right? These are the brands that are going to stick and people want them. They're called liquid watches. That means you could get cash for them anytime you want. Maybe you'll lose a little bit. Hopefully, the longer you keep it, you'll make something. It's not like you go and you're going to buy a brand new car and you're going to drive it out and it's going to depreciate the next day. This is something that, it could be an heirloom. You could pass it to your kids, or it could be something as you hold it as an investment and then resell it.
Yeah, that's fantastic. I myself have done a lot of work to turn myself from a consumer to one of which that I won't say doesn't appreciate the nice things, but like I'd rather I'd rather put it into something that's going to grow and make more money.
Correct.
But you've definitely turned that side of my brain on to be like, anything that you buy could be as lucrative as watch collecting.
That's right.
Yeah,
That's right.
Yeah.
Yeah, absolutely. And if you stick with the known, the time tested brands, right? Like again, Patek, Rolex, Audemars. These are the big brands. These are things that usually just go up in value, right? Rolex is the number one brand. That's the liquid brand. Everybody wants it. Everybody looks for it. You can't even get one. I just personally got my first brand new one from the Rolex dealer.
Wow.
And I waited like 3 or 4 months for it. And, and it's an investment. It's an investment. Yeah. And I bought one that's probably never going to go out of stock.
Yeah, that's cool. Like, this is way above my knowledge of it, but like, my dad is a huge collector of watches, and he's telling me like these different kinds of Rolexes, like just going deep down the rabbit hole, and I'm just
exactly.
Like, that sounds really fancy.
I wish I knew more. Yeah, exactly.
Yeah.
Yes.
Yeah. But let's get. I'm sorry.
It's
know
okay. No, it's great.
I was kind of unpack this a little bit. You were kind of on your next thought. I don't know if you were going towards your coaching business.
The coaching, yeah.
Okay.
Yeah. So Focal Point Coaching is a franchise. It's a business that I own. And it's something I'm putting a lot of time and energy in it. And I'm going to tell you why. Helping people in business, really resonates for me, because I was in the business for 30 years. I had multiple businesses. I bought, sold, ran. And, we said something a little earlier about trying to build businesses up. And like, I was a little fortunate, right? I had mentors, and you said, hey, I didn't have a mentor. But there's business coaches out there.
Yeah.
And what does a business coach do? Like, I'm a certified business coach. So, we help people, in business. And what do people struggle with in business? Money, time,
customers,
people management, right? And exiting, right? Okay. So like time, I was a business owner. So I was brought up, hey, you go into the pharmacy in the morning, you leave at night because that's your baby, and that's what you do. But I never factored in, hey, by the way, I have a kid who's playing Little League, a kid who's playing soccer. And, and I look back, I'm like, as much as I made a lot of them and I coached my kids, and I missed a number of them. I missed a number of them because of that. And I said, you know what? Let me get into coaching, because I want to help that entrepreneur like me who didn't know. Like, again, you don't know what you don't know. And now, like, I want to offer them my help, how to find some more time, how to increase your business, how to deal with, employees, right? How to deal with different behavior of employees. And then the other thing is the hope, right? The other thing I want to sell is hope, because when you own a business, right, what do you hope for? You hope that you sell it, right? Yep. 80% of people who want to sell never sell because the owner's not ready. The owner wants to sell. They think they want to sell, but they had nothing planned.
Yeah.
And from experience, when I bought my first pharmacy, my mentor, he was the one that, hey, I got in at 7 a.m, left at 7 at night, did it 6 days a week. And when I said, hey, I want to buy the pharmacy, he goes, I want to sell you the pharmacy. You work so hard. I love it. He goes, I don't know what to do with myself. He's like, if I sell this place, he goes, I'm probably going to die. He goes, because this is all I know. And at that age, I didn't know I was going to be a coach 30 years ahead, but I was actually coaching him and telling him, things that he should do, like go get involved. And eventually he did. And
that's cool.
So here I am. So that the whole portion about the exit plan is, what do people do when they want to sell their business? Because everybody wants to sell their business eventually, right? Yeah. And 80% fail at it because they're not prepared. So as an exit planning coach, I get people prepared mentally, getting their personal stuff together, their financials, their business together, and then coming up with a plan of what they're going to do. Because to say, hey, I'm going to go and retire to Florida, well, be a little more specific. What are you going to do with your 40, 50, 60 hours a week now? right? Divorces happen, death happens because now you're with your significant other, and you can't get along because now there's no buffer, right? And there's only so much golfing you could do, especially if you live in New York. Well, you can't golf in the winter when it's snowing out, right?
Correct.
So what do? So these are the areas now that I'm at a point now where I'm saying, hey, I want to help more people, and I want to help them. I want to give them hope, and I want to hold their hand. Building a business, entrepreneurial growth is huge. Most schools don't teach that, right?
No.
So how do you learn it? But if you maybe a business coach who's going to keep you accountable with, to have somebody there, I'm not going to do the work, but I'm going to keep you accountable. Like Larry, if you came to me, I would keep you accountable and say, all right, what's our win this week? What are we going to focus on this week? And here's how we're going to do it. So that's what a business, and that's why I'm shifting from pharmacy, which I've coached many people. I've been in the corporate world, which I coached people. And now I said, let me bring this and get into this business and really help the mass people. And that's where my focus is now. That's where I'm putting a lot of my energy now.
Yeah, that's great. The kids are getting older. You're still like coaching them, but
absolutely,
you have a lot more clientele with business coaching.
Correct.
And no, that's fantastic. I think there's a lot of people, like you said, that they want to retire. They do not have a plan.
Right.
And maybe it was like your predecessor. They eventually want to retire, and they have to put thoughts behind that. But at the same time, it's like we talked before. Like if my kids don't want my watches, I want to make sure that the business gets into good hands and
that's right.
And get paid well of what I built. So
that's exactly it. You don't want to give. Look, there's two ways you're going to get out of the business, right? Alive or dead, right? So you don't want to just leave it and then it goes into like a probate and then the courts eat it all up. You just don't want to do that, right? And a lot of businesses that go for sale, like people try to sell them internally to maybe their manager, maybe to their staff, or externally. But when you do it externally, like there's challenges in everything. I sold multiple businesses externally because I didn't want to take it back when I decided, hey, this was time. But the problem was, Larry, I didn't know what to do after. I didn't have a coach with me. And that's another reason why it resonates so much with me. I didn't have somebody saying, hey, wait, before you sell this, let's figure out what your next step is going to be and how are you going to get there. And I wish I had somebody holding my hand through it. And, I went through COVID, and any business owner who went through COVID, and not because I went through it and survived it, wow. I mean, I got to tell you, I'd be listening to that person because it was brutal. Nobody came out. My pharmacy was in a upper class area, and let me tell you, it was a ghost town, and nobody came out. And you can't make money with no foot traffic. It's really hard. But I kept my doors open. I didn't close one day. So
that's awesome.
Yeah. That's where the experience comes from.
Yeah, that's two of the big things that are kind of unpredictable. Is like
disaster,
an epidemic, or like a natural disaster that
correct.
Takes the county down or whatnot.
Absolutely.
Yeah, that's great. Well, I'd like to also, like, I think you've mentioned, a couple wins and some of your challenges.
Sure.
Would love to kind of delve into. I don't know if you are currently still actively doing real estate investing, or if your time is spent on all these other ventures. But is as far as your current investment strategy, is that like, I'm curious, are you looking, when you bought those properties in the Bronx, was that like single family homes? Was that commercial?
They were all multifamily homes.
Okay.
So now the plan is the exit plan of it, which would be to, as I get closer to retirement age, as we discussed earlier, like figuring out these 1031 exchanges where they could be a passive investment, instead of rolling it into another like a building or another multifamily unit. So it's more like a fund that's managed professionally. That has the same, it's from it's DST, it's Delaware State Trust. So it's all that. Thanks for the state of Delaware for doing this, right? So, you could just take the proceeds and, you can't touch it and move it into that. And this, again, simple. I haven't really dove deep into this because I'm looking at a couple different ones, but you leave it in there and then you don't really pay the taxes on it, or you pay minimal on it. And with that, I can always transfer it to my kids. And then the returns are like 5% or something. So, but it's hands off. It's passive. You don't have to worry about, pipes breaking, roofs falling apart, tenants calling you in the middle of the night. So that's going to be my exit strategy. And the other reason I became a coach is because I wanted to prepare myself this time and have the knowledge on how to exit the right way from the real estate market also. Because, there is hand holding also, and I'm going to hold my own hand at this point, because now I'm certified. I know how to do it. Whereas I didn't know really what to do when I sold my pharmacies. So, that's really that. So am I active in buying real estate? No. But my oldest son may seem interested in that, and I would probably get into it and teach him, and maybe do commercial or mix. I like the commercial is good because you have a person's business where their livelihood is, and chances are, they're not going to run out in the middle of the night. Hopefully you get something with an established business there. So that's my thought process on that. And now there's more franchises that are going into the real estate business that are buying, like say a Dunkin' Donuts or I don't know. I'll just say McDonald's, which that's probably out of a league. But these franchises that go in and they rent it, and it comes from the corporate office. So pretty much your rent is guaranteed, and you can have your increases.
Yeah, no, that's awesome.
Yeah.
I feel like even though you're exiting the real estate, you're passing it on to your your son. That
correct. Passing the knowledge to them. Yeah.
Yeah, and you're giving them also like the asset. You're not giving them like the cash to where it could just be squandered. It's
exactly.
Yeah,
exactly.
awesome.
It's the knowledge that comes with it. Like I said, my mentors gave me knowledge that I could never learn ever in school. And my greatest one, who's my partner, Matthew, he said, take notes. Like when these guys speak, he goes, just take notes. He goes, because that's how smart they are.
Yeah.
And nobody had a business education, but they were the smartest business people I ever met in my life. Still to this day. So yes,
that's
absolutely.
That's
kudos to them. Yep. I wouldn't be here without them.
Yeah. But yeah, it seems like your time is spent more on the business coaching.
Correct.
And
watches and business coaching now. Yeah.
That's cool. But I guess even going back to real estate, a lot of people are not aware of like the creative financing and how to fund deals.
Correct.
Or even businesses for that matter. How do you usually think about deploying capital for those income producing assets?
So my thing always was use the least amount of your own money.
Yeah.
Right. Because say if you have like little money, put half down, figure out the financing. Even if you take, an interest only loan for the first 5 years, big deal. Mm-hmm. Right. Eventually it's going to kick in and it's going to start producing the income that you want. Right. I would get a little more greener on the house, meaning make it a little more energy efficient. I would definitely try to do as much work inside to where you can capture the higher rent. And with that, you're gonna make that income. But I would just use, and I still to this day, I try to use the least amount of money of my own and try to find. So even when I bought the Focal Point coaching, I took out loans for it. I financed the whole thing. Through loans. I didn't want to use my own money, and that's how that's how I financed the whole thing. Minimal money. Even when I bought my other properties, used minimal money out of my pocket. I financed it, eventually it does even out. And you have to go in. I think with real estate, you have to go in with, especially when you started at a young age like I was. You're building credit, you're building wealth, you're building a future. So you know what? If you made $100 at the end of the month, or if you lost $100, doesn't really matter. It doesn't really matter, because I could tell you now, which I couldn't tell you 30 years ago, that 30 years fast forward, wow, like I'm so happy I did it. I wish I would have bought, 10 more, right?
Yeah.
But who knows, right? Because I thought, like I said, I thought I overpaid on all of them, which I didn't, right? But that was then. So yeah, I think the answer, the straight answer is there's so much creative financing out there. You can look at your conventional banks. I use the credit union. You can use that. You can look at credit unions. They're a little more flexible than, say, a Chase Bank or a TD Bank. But there's so many lenders, private lenders, not private meaning like somebody just giving you money out of their pocket, but there's smaller companies out there that are in the lending business that you may pay a little more of an interest rate, but big deal. You're going to write off the interest anyway, right? Yeah. So take it what it's worth and take the money and use it. Obviously, you can't squander it, but use it to invest, because from that, then you could grab a second mortgage, buy another property, and then buy another property. And that's how the whole wealth building process works in real estate. And I remember that in the days of the Carlton Sheets. I don't know if you're young enough, but that's how he did it. He was one of the first infomercials at 2:00 in the morning about, getting rich in real estate. But that's how he did it. He used very little money, little or no money down, and then he would just, get it, build it, mortgage it, buy a second, buy a third, buy a fourth. That's the secret. Yeah, and I think it still works.
Repeat.
Exactly.
It sure does. Like, they say OPM, other people's money. And
that's right.
That's how a majority of people do it. And
most people do it like that.
Yeah. Yeah. And even with real estate and business, this is not a get rich quick scheme. This is a long-term play. And you have to think about it like that. And I know there's some people that, they may have imposter syndrome and they're a little bit, scared. It's just like, take the leap and, just like you did, like you've learned so much over the years, and now you have like a well-oiled machine for your real estate. You went from self-managed to, it's totally passive now. Exactly. And I feel like even if you borrow the money, don't think about like that debt. Think about the arbitrage that what your vision is in the long term. And it's just like, you're going to be making money, and you're going to be making pivots and changes here and there for your business or for your real estate. And eventually that money is going to be paid off in no time. And it's just like, don't concentrate on that. Like, look at the future, right?
Yeah, look at the future, and it's an investment. You're not a consumer, right? You bought something. You think about the house as a piggy bank, and you're putting money, and it could be pennies, it could be quarters, or eventually it's going to be dollars. And and if you don't look, Michael Jordan said it a long time ago. You miss 100% of the shots you don't take, right? So if you don't take it, and I was, my parents didn't educate me. I did have, and it's funny enough, my mentors never owned real estate. They owned the house that they owned, but they owned the business that at that time, the pharmacy business was a very lucrative business, and that's what they did. But they didn't own real estate. They didn't want to be bothered with it because they worked so much. They didn't want another headache. That's what it was, So, but I looked at it differently, and I said, hey, I think on all my readings, and you have to look. Education is the number one thing. You never stop learning, right? I'm 58. I'm still learning every single day. Every day, I pick up books. I'm learning something new all the time, and I always teach my kids that you never stop learning, right? You may not like going through school, but when you get older, you got to take up the learning. You have to take up the reading, something you like, and become an expert in it. You're never an expert in everything, but you learn enough where you can have a conversation with someone, and you keep on learning. That's it. I keep on asking questions. part of coaching is just asking questions.
That's right. That's right. Yeah. I mean, I think people have to, whether they're starting out or they're in their mid-career or they've been doing it for a long time, but, you have to commit to being a lifetime learner. And,
That's right.
Like you said, you're never going to know everything, but you know as much as you can to, make that profit and
That's right.
Succeed. And then maybe at that point, you're like, okay, I've done this for a while. This is working. Maybe I can change lanes and have another stream, right? So
yeah, I mean, it's multiple streams of income. That's really, look, nobody's job is ever guaranteed anymore, right?
That's right.
I did a stint in corporate and that ended. Nothing's guaranteed. Look, business is not guaranteed either, right? You can have a lucrative business and then, something happens, like you said earlier, disaster happens, epidemics happen. And all of a sudden, your business is down. What do you do, right? So, I was always brought up with having a licensed profession, right? You could always get a job. So that's what my college thing was. Don't go to college and, maybe do nothing. And I always tell my kids that too. Like, you got to come out with something, right? You got to come out with something because you need something to fall back on. God forbid something happens. And I always have my pharmacy degree to fall back on.
Yeah.
So, but back to where you said, like, anybody listening to this podcast, real estate is a great means of making money long term. It's not the rabbit in the race. It's the tortoise in the race. It's a slow process. It could be very frustrating at times, but I'm going to tell you, as much as I know about it, it is a solid investment. You knock on it, it's there, and it'll always be there, and you just do it, and you figure it out. You learn it as you go, right? Fake it until you make it in it, right? That's it. You become a landlord. Okay, have conversations with your tenant, right? You could go online now. You could take a course. There's leases. You just have everything written. This is what I want. This is what I don't want, and that's it. They break it. You give them a warning, and then you file. You get them out. But you're not going to have ugly tenants all the time. So I think it's a good, there's a lot of good in that. So that's what I'll leave you with the real estate. So definitely do it.
No, I think that's great advice. And there's so many, like, maybe back then, maybe no one wanted to have the headache of being a landlord, but nowadays, like, there's so many different ways to invest in real estate.
Right.
You can still have ownership or partial ownership of a property, but you don't have to be the operator. You can have a team. You can be in a syndication. You can have, there's all these different ways. So
you can hire a manager. You know what I mean? Some real estate brokers manage the properties. You buy a property and they'll manage it for you. They take whatever 10%, 6%, but they do everything for you. They do everything. Exactly. And if if the ROI is big enough, hey, you can afford it then. Maybe some people have more money to put down, so their monthly nut is lower. Yeah, then you can afford, to pay somebody to manage it for you. And you get a couple, maybe you're not making any money on it, but guess what? You have a 20, 30-year plan, and now that becomes your retirement. That's your 401k.
Yeah. No, that's great. So I know you mentioned alternative assets and investing, and you've learned a lot of things. And two of the things I think you've mentioned in the beginning was like annuities and life insurance. I feel like a lot of people don't know certain ways to either recycle or reuse your capital in between your your deals or your properties. One of which I have been able to really privatize your banking system and kind of use either one or both of those to either fund your deals through a whole life insurance policy. Some people think they may have to go the long route and save it in the market or do a CD or I've kind of, just because I'm a late starter, I don't have the opportunity to like spend 40 years on like a mutual fund or 401k. So I chose these other vehicles. Is that something that you have seen people do, or
Sure.
have you done any of that yourself? Or
Yeah. So, a lot of people I talk to don't understand investing.
okay,
Like
yes,
they don't understand it, and
yeah,
they don't know anything about it.
right,
And like my first thing always was to learn money, right?
yeah,
You have to teach yourself about money, right?
yeah,
And putting your money in the bank is great, it's safe, but it's not going to grow. So like
exactly,
we're in a market now. It's a little choppy now. Again, I told you I was a trader. I also had my Series 7. I was a financial advisor, licensed and everything. In between. So I understand a little bit about it, but you miss the high points of the market. When the market goes down, everybody says, "Oh, thank God I'm not in it." But and history proves itself, right? That the bull runs are longer, and when they go, you have to be in it. Can you time the market now? I don't think anybody could time the market. My good friend calls me all the day, and he knows I'm a trader, and he's like, "What?" I was like, "Listen, I can't explain it. You're not going to explain it because the people on CNBC can't even explain it. But
exactly,
you just got to be." I said, and that's why, like, I use a program to really get me through it, and I blame the program when it makes a mistake. I don't blame myself, right?
yeah,
But like you said, like you don't want to put the mutual funds are great, they're safe, but they kind of like out of when I first started, mutual funds were good. ETFs are much better now, but you don't have to be a genius anymore because you could buy an S&P 500 index fund and you're in
yeah,
it, right?
yeah,
You could buy and you could buy a Nasdaq one, right? And guess what? You're in the space. They probably invested, or they're going to invest in SpaceX, right? So everybody Monday was like, "Oh my gosh, what's SpaceX going to be?" All right, it came up. I didn't buy it, right?
yeah,
But if you're investing in these ETF funds, and that's probably the secret sauce, right? Because you're going to get the ride of the market, and then you could get these funds. You could get a real estate fund. You could get a gold fund. You could get just a stock fund, an international fund. So, my opinion, break them all up.
yeah,
Break them up. Get 5, 6, 7 different funds. I still have them, right? I have them, and then I trade like 10 stocks in between that. But that's the one. So to the answer to your question, like if you're a late stock, ETFs, you're going to make the money versus parking it into a mutual fund where you're not going to make the money. Bank CDs. Look, you have to put something in the bank, right? So you want to keep a cushion, right? They always say like 3 months your expenses. Throw it in a CD. I use Marcus. It's through Morgan Stanley. But
okay,
it's a higher interest rate, and your money is liquid. So you could park it in a CD in there, but you can always take it out. Whereas if you go to like a Chase Bank, they're going to probably charge you a fee to break it in case you need it. So that's I always start with a cash position, right? You want some kind of CD, making a little extra money, right? I would get any of these softwares that you have, like E-Trade, TD, whatever you have. You could go in there and you could give them your age and say, I want to invest in 5 or 6 ETF, and they'll pull them for you, and you'll get 5-star rated one. That's how easy it is. Yeah, I mean, you don't have to. Back in when I started, like you have to literally look things up. Right? This is all there now, and there's most of them don't even have a fee to get in. And then you just dollar cost averaging is the most important thing. Put X amount of dollars, again, $1 better than no buck, right?
that's right, yeah,
And just put it in consistently into these ETFs. And that's the simplest way. You don't have to wait for the next IPO or the next gold stock or what's the hot stock. Look, if anybody's telling you that they have a winner, run away. Run away. All my years in investing, anytime I took somebody's opinion, I lost. All right, I
you
lost
can't beat
my
the
shirt.
market, right?
You can't beat the market. It's
Yeah,
like a casino, right? You're not going to beat the casino. That's why they're in business, right? You're not going to be. So be smart and just invest smartly. And any age, preferably a young age, middle age, older. But some people start in their 50s and they say, "Oh, let me start investing for my retirement." Right?
yeah,
It's never too late.
it
It's never too
happens.
late, right? Look, life brings people different areas, right? So you just don't know, right? You don't know, but that's the easiest way in investing. right? You don't have to be picking stocks or, oh, I should have bought, SpaceX because it went up $30 the other day. Who's going to know that? Who's going to know that? So
exactly. If you're not paying attention and you're
exactly, and you shouldn't be doing it.
Right. Yeah.
Yeah, you shouldn't, because you're going to only get hurt with that.
Yeah.
So that's my spiel on investing.
No, that's great. That's great.
And I did it when I was a financial advisor in the .com age, where everybody want to know, is Amazon.com or this, and I'm like, why? You're a conservative investor. Why would you even want to? Yeah, you probably lost that thing. The 30 or 50 point run, but you know what? That wasn't the type of investor that you are, right? Exactly. You're a conservative investor, right? So I put people in where they were supposed to be. You're conservative, a little more aggressive. We made you a little more aggressive, right?
Yeah.
Like my kids, I want them to be aggressive now, right? They're young, right?
Yep.
So you be aggressive until maybe you're 40 years old or 50, or you got a family, you have a mortgage, and then you start breaking it down a little bit. But be aggressive and go with the move of the market.
Yeah. Take a risk profile and see where you are, and
that's correct.
When you, like you said, when you're younger, you can afford to
exactly
be a little bit more aggressive. So
yes, absolutely.
Awesome. So I guess as far as like in terms of your goals, personally and professionally, like over the next like 2 to 3 years, of growth or scaling, like where is it that you want to be?
Sure. So as a pharmacist, I really want to do more consulting work.
Okay.
Where I love the business. I love being a pharmacist. I love giving advice, but I kind of, again, back into helping people. I want to help pharmacy owners and people who need advice on how to build their business, and it's more of a consultant. Like I'm working with a client now who went from the food business, a family-owned food business, to wanting to buy a pharmacy because he thinks it's a good investment. So he asked my help, and I'm pretty much consulting him on how to operate it and day to day. He's not open yet, but I got him to where he needs to be until he opens. As far as other businesses, like my goal is because I was tied down for so many years in the pharmacy, I kind of wanted something where I could travel and do where I want to be, whether I want to be in Florida or the Carolinas or in New York. So that's really why I got involved in the coaching, because of the flexibility and the watch business, because again, flexibility. I can sell watches anywhere. Most of the time it's online. So I can sell watches anywhere. So where do I want to be in like 3 to 5 years? Coaching and watches. And I think that when people say like, when do you want to retire? And my answer is, well, I don't want to retire, because I found 2 passions in my life that I could probably do until, the last day, because it's not going to be work for me, because I love talking about watches. And I love talking to people about coaching. And when I can use my background and my experience and helping people and holding their hand through the process of selling their business, I mean, how bad could that be? I mean, that's that can't be a bad day of work ever, right? So
that sounds awesome. I feel like if you're doing stuff remotely, you have the time freedom because you set your own hours, so to speak, and then you have the location freedom. You can do this anywhere.
Do anywhere you want. Exactly. So So that's really where I think when you're talking about business and personal, I think you have to do 90-day sprints, right? Like every 90 days, you got to kind of say, where am I? Where am I today? Where do I want to be? And how am I going to get there? Right? How am I going to fill that gap? And every 90 days, okay, here I am today. What was good? What worked? What didn't work? And then you go back in another. And you know what? After a few 90 days, it kind of gets it. You know what you're doing right. You know what you're doing wrong. Right? Yeah. So obviously you want to do more right than wrong. Yeah. And you discipline yourself. And like, I know how to get this. And, in the coaching field, we always say, like, eat your frog every day. Right? What does that mean,
Brian
right?
Tracy,
Yeah, Brian Tracy. Well, Brian Tracy he was the founder of Focal Point, right?
Oh,
so
okay.
all his teachings of Focal Point. So that's where I get it from.
Oh, perfect.
But like every day, like what's your frog area? Like my frog is exercising. Like I just
Yeah.
want to get that out of the way every day, right? Keep
Yeah.
myself healthy, right? It's like some people, it's like making their bed, ironing their clothes. What's your frog every day? What do you hate doing? Is it looking at emails and once you do that, and it's again 90-day sprints, you keep on teaching yourself on all these things that you want to do.
No, that is such a great point. I love Brian Tracy, and
It's amazing.
I feel like goal setting is so overlooked, especially
Yep.
when people first do it. They have this imposter syndrome. They're comparing themselves to others. And if you're at like a level 1 and other people are like level 5, it's like, don't do that to yourself.
Exactly.
Set a baseline. Like you said, that your first 90 days, set a baseline, or first year, whatever it may be, set a baseline, and now go from there. Like, what you're doing this quarter is going to be better than last quarter. You're making pivots, you're making shifts, but stay in it for the long run. Don't quit. And,
Exactly.
Set your goals. Smart goals.
Goals are important. Goals are really important. Eat your frog.
for sure.
Yeah. But you have to. I mean, if you don't have goals and you can't keep yourself responsible for those goals. I mean, that's it. You have to plan, right? If you fail, if you fail to plan, you plan to fail, right?
Correct.
So
yes.
you always have to plan. I mean, I keep notes all the time. Like every day, you see my notes here. This is what I have to do today. This is what I have to do, and I just mark things off. And then I have like my weekly, my nightly, and this is what I have to do. And it covers everything. And I have my youngest, who's 16, plays travel baseball, so I have to factor in his schedule in between there, and all the things that involves in him. So yeah, it becomes a little. So I'm constantly planning, right? That's really important as figuring everything else out that I'm doing, right? So
yeah, that's. I think that's key with a lot of things, especially when you're running a business or you're trying to scale something.
That's right.
You're trying to level up or what was it? I think it was 43% of people who write down their goals actually achieve them. So it's just like,
I believe that. I really do. You have to write them down. And they constantly, and look, they change, right? They constantly change, right? So and then and I think as the older you get, you find that what really resonates with, like, it's family, it's relationships, it's your friends, and it's your beliefs and working on yourself, right? Self-help is like the biggest thing. Like I exercise, I walk, like I try to walk every night because it clears my head, right? And it's a lot of things that make you a whole person, right? It's just not working all the time, right? I was brought up with, just go to work, right? My father worked 7 days a week. Just go to work. What do you mean you're not working? Like if I was off for Zoom, what are you doing home? You should be working, right? And it's like, as now, again, 58, I'm like, what the heck were they thinking about, right?
Oh gosh.
But then I say, I became that person, right? I'm the workaholic, and I have to stop that. I have to, cut back a little bit, right? But that's how I was brought up, right? My first mentor, he's 78, and he's still working in the store. 78. Okay. All right, so
he must love it.
He must love it, yes. Or that's all he knows. That's it, right? Okay. So that's the problem. He doesn't know how to exit yet, right? I'll have to get to him soon, but he doesn't know how to exit. So,
I think that's important, is to have that balance to where everyone needs downtime. You can't just keep going. You're going to burn out. You need some downtime, and I love self-development. Self-reflection, big fan of Jim Rohn. Work on yourself harder than you work for others.
Amen.
Right?
Absolutely. You have to always work on yourself with that, right? Absolutely. And there's a lot of meditation that I do. In fact, I just took a 6-week positive intelligence course, and it was all mindfulness and how to like just slow it down, and it was amazing. Absolutely amazing.
Fantastic.
Yeah, absolutely amazing. I picked up a lot from it. Just different touches and sounds, and absolutely great. just to bring your brain. My brain is constantly, on the go 24/7. So for something, when something calms me down, then it works, because it's hard to calm me down, right? Well, take for instance today, like I've been up since 7 o'clock at, networking meetings, so, and here I am, and we're talking still, and I still got the energy, right?
Oh,
So,
yeah. I mean, you probably have more energy than someone who,
exactly, half my age,
woke
right?
up later. Yeah,
exactly.
for sure.
So,
No, that's great. Well, I definitely want to get all your references that you mentioned in the show notes.
Yes.
I mean, especially the mindfulness, I feel like that's super important.
Oh my gosh, so important.
Just kind of in concluding the episode, where can people find you if they need help with their business, or if they need some coaching, or maybe people are watch enthusiasts. Where can they find you?
So the easiest way for coaching is S as in Sam, D as in David, ILEO at focalpointcoaching.com. That's my email. My cell phone works for everything. I use it for both businesses. So 914-262-4230. And that's the easiest way to connect with me, whether it's a watch, whether you want to talk about real estate, and whether you're looking at some coaching and you want to exit, a business, or you start thinking about it, or maybe it's your parents or something. Your dad's working 70 hours a week and doesn't know what else to do. Maybe we can help them. So I'm available. And I would love to talk watches with people. I can help you. I could guide you to a good investment. So it's any way I can help, it would be great.
Yeah. Well, this has been amazing. I really thank you
Larry.
for joining the podcast, and I
appreciate it.
Yeah.